You get two elements to the kind of the loan against the crypto. The first is a 30% down payment, which is against the crypto. It's completely variable and there's no tie-ins. And then the 70% is a traditional mortgage, which has a lien against the property as well. That tends to be where a lot of crypto natives struggle, is that they have the funds, but often they don't have the ability to get a traditional mortgage. And banks are kind of unsure about them as borrowers.
Welcome to How to Lend Money to Strangers with Brendan Lagrange. In episode 29 of this show, I spoke to Phil Blows, co-founder and CEO of Accrue, a listed exchange paying fiat interest on crypto deposits. It was a move that I thought might be a small and early step on the path to a broad loan against crypto marketplace. Then stuff happened, markets bled, and I figured we'd added a few years to that timeline. But all of a sudden, I read an interesting press release, and so I invited Phil back to tell me more. Right, well, Phil Blows, welcome back to the show. You're the co-founder and CEO of Accrue, and you're also a returning guest, having appeared on episode 29, I think it was, all the way back in February. But for those who maybe haven't listened to that one yet, could you maybe start by giving us a quick background of who you are, as well as what Accrue is and what Accrue is doing in the crypto space?
Sure. Yeah, my name is Phil Blows, based in the UK, founded a company called Accrue, which is aimed to be the safest place to invest in crypto. We're listed on the London Stock Exchange, well capitalized, especially important given the market conditions that we've seen in crypto over the last 6 months. We appeal to professional or people who are trying to be professional about their crypto investments, so looking for a place where they can get exposure to quality coins, or indeed just investment solutions which allow them to get broad exposure to crypto markets, but also earn yield as well. So some people who are holding crypto, they don't know that they can actually earn interest on that crypto. So we provide that service as well. When someone logs into the app, there's going to be really three services that they see. First is exchanging kind of fiat or other cryptocurrencies into other coins. Second is yield. So depositing their crypto, earning yield on, market leading yields on the crypto that they hold with us. And the third is kind of these indexes. So effectively one click execution and you get broad based exposure to several crypto assets. So really just designed to be a safe, easy place to invest in cryptocurrency.
Yeah, and when we were last speaking, it was on that idea that this paying of fiat interest against crypto holdings was maybe a first step on the path down to a world where lenders would see crypto assets as something they could hold as collateral, like they might with a share portfolio, and make loans to consumers so that consumers wouldn't have to liquidate holdings. At that point in time, one of the big hurdles we foresaw was that of volatility in the crypto markets. And before we really get into the main topic of today, I see that within Accrue, you've been working on helping consumers to manage volatility with Accrue 10.
The first thing I would say is a lot of commentators in crypto are kind of crypto maximalists. They almost say it's everything in crypto or nothing at all. And we're very much against that message. What we believe is that cryptocurrency has been the best performing asset class for the last 10 years or so. But at the same time, it remains highly volatile and it's high risk. So it shouldn't be more than, say, 10, 15% of your portfolio, but should be a part of a diversified portfolio, which, when you look at things like stocks, bonds and property, it should sit alongside that. And you look at the average crypto exchange and you'll find, 5,000 coins or something that they've listed. And most people haven't got the time or inclination to want to get involved and try and work out which coins to buy. That's where Accrue comes in. And we've launched really two products. First is Accrue Trend and the second is Accrue 10. What Accrue 10 is simply a basket of the top 10 crypto assets weighted by their market size. So that means, predominantly you get exposure to Ethereum and Bitcoin, but also you get exposure to those sort of emerging next 8 tokens, which hopefully over time, if they're decent projects, will also add considerable returns to the portfolio. The second is Trend. And what Trend does is it's aimed at increasing your exposure to crypto. There is a solid trend in the market established. And one thing we've seen with crypto is over the last 13 years since it first arrived, it's been highly cyclical in the way that it's traded. You've seen these massive price appreciations followed by 1 year, 18 months worth of declines. And this cyclical type of price action actually lends itself, or historically has lent itself very well to trend following systems. They're super basic. Look at the price now relative to the last 3 months. If the price now is higher than it has been over the last 3 months, buy. If it's lower, sort of do nothing or sell. And that strategy has performed phenomenally. So we built that into the app as well, where you can essentially get exposure to that accrue 10 portfolio, but you're timing your entry by using this trend product. And to give you an example, over the last 2 years, Bitcoin has returned something like 120, 130%, but the trend product has returned over 700%. The trend product will never kind of buy the bottom, sell the top, but hopefully it'll capture 75% of these big rallies that you see. And that's what it did the last cycle. And interestingly, it's just started buying now.
Yeah, and I guess of helping investors and consumers to avoid the panic that can come. Obviously, I think crypto is most exposed to this, but it's always in the news. So when prices are going down, it's on every headline. When prices are going up, it's in every headline. And that can add stress to the consumer who's sitting there with a holding and trying to make a decision. So it's good to hear that they've got these sort of investment tools that can help do that with a little bit more structure than just seeing what's on TV and rushing and hoping you don't miss out.
Exactly. And it's something I use myself. I'm just as susceptible to this sort of investor behavior where you panic when it's at its lows and you get greedy at its highs. And these systematic approaches take out that like human bias.
You mentioned, obviously, we have had a long run of downward price pressure. That's true in the stock market as well, but maybe a bit more exaggerated in the crypto world. And that happened, I guess, about 2 months after we last spoke. We saw a big downward turn on all fronts. And so, if I'm honest, I didn't expect much in the way of news to be coming out on that journey towards a world where crypto assets were seen as something that could be used as collateral for real world fiat loans. And then all of a sudden, a couple of weeks ago, I saw you announcing an interesting new project.
So ByBrix was really founded from speaking with a lot of sort of larger crypto holders in our client base, really. And they're saying, I really want to buy a property, but most of my net worth is tied up in crypto right now. So what we said is, let's design a mortgage product whereby you don't need to sell the underlying holding. You can simply use it and borrow against the crypto. And to be clear, it's the leading crypto. So at the moment, it's Bitcoin and Ethereum. Potentially over time, it might be tokenized gold, tokenized sort of S&P index trackers, things like that. But just for the very same reasons that you spoke about at the start of this, which is allowing people to hopefully experience the continued upside of Bitcoin, especially now as we see inflation begin to appear in the market. I mean, one of the worst investments you'll ever make is that there's the fiat down payment in your property. Trying to give people more options to use different types of collateral, hopefully inflation-proof collateral when buying property. And ByBrix just makes that process very, very simple. And we've got an amazing team based out in the US. Troy Huerta, who's our CEO, sort of started and managed a mortgage bank, 30 years experience in mortgages. So he's bringing that kind of network and traditional understanding of the normal mortgage market and putting the crypto spin on it. And it's a product that at the moment with property prices coming down and sort of interest rates going up, and obviously crypto having had a bit of a tough run, your demand isn't crazy right now for it. But we know that this is sort of where the puck is going to. Really exciting products, and I think one that we're going to see significant, continued traction on as markets stabilize.
I don't have huge crypto holdings myself, but I've got some shareholdings that I'm now using for a property purchase, and I understand the sort of stress of needing to buy a house at a time when it's really not ideal in the market. If you have to liquidate, well, do I wait another day or do I wait another week? Is it going up? Is it going down? These are stresses that shouldn't be tied to something like buying a house. So it's interesting to hear, new tools to make that work. In simple terms, how does it work? How would somebody who's got significant Bitcoin holdings use ByBrix?
So the way it works is, just say someone wanted to buy a property for $500,000 for argument's sake, they would need to deposit $500,000 worth of crypto with us. Otherwise, 100% loan to value against your crypto. Then you get two elements to the loan against the crypto. The first is a 30% down payment, which is against the crypto. It's completely variable and there's no tie-ins. You can, at any point, you can repay it or move it elsewhere if need be. And then the 70% is a traditional mortgage, which is sort of has a lien against the property as well. That tends to be where a lot of crypto natives struggle, is that they have the funds, but often they don't have the ability to get a traditional mortgage because they don't know the providers, don't know the market, and banks are kind of unsure about them as borrowers. So we've obviously got a network throughout the US and globally whereby we know the crypto-friendly lenders in the traditional world of finance, and we can then help them with the down payment via the ByBrix kind of financing side of things, which actually uses a lot of decentralized financing liquidity sources to help pay for that down payment loan. So it's simply put, it's one-to-one loan to value. And that 100% loan to value is comprised of a traditional mortgage and a crypto down payment kind of variable loan.
Okay, so yeah, it's end to end. It's not a case of the down payment, then the consumer has to find the mortgage. They're getting it all in one place. I guess the question, coming back to that idea of volatility, if I look at the product design, you've built yourself in some protection with the formal mortgage component as well. But is there something like a margin call if prices drop? Do consumers need to top up their crypto holdings?
If there is a huge collapse in crypto prices, there is a margin call. To give you an idea, just say you did this whole deal, this property deal, when Bitcoin was at 20,000. We would be margin calling that individual at 13,000 when Bitcoin was around 13,000. We're trying to get them just to top up and improve the kind of the health of the loan. If that loan then gets down to 10,000, what we'd then be saying is, look, we need to sort of liquidate a portion of your Bitcoin. We would be selling the Bitcoin and paying back the loan. So the worst case scenario for the customer, whereby the Bitcoin essentially does a slow dive to zero, is they never lose the house or the down payment. The house isn't tied to the price of Bitcoin, for example. So the worst case scenario is their cryptocurrency is essentially liquidated to pay off the down payment element of the mortgage. That's where the safeguard is for both the customer and for us as a business.
Yeah, and we've obviously seen prices drop, but I think in some ways prices dropping and then holding, and now again the last couple of days returning upwards again, it actually gives us a little bit of confidence, I suppose, that we've seen ups and downs, and they have been dramatic, but still, in terms of the ranges you're talking about, there's a lot of leeway. It's not a case of sort of day-to-day price changes are going to be a problem.
Exactly that. And that's why the underlying down payment loan is over collateralized to an extent where we're not jumping on the phone trying to look for margin all the time. It needs a significant move in crypto on that, we obviously have back tested. It's not to say that crypto's most volatile days aren't ahead of it. So we've got to be careful and we've got to stress test these things. But it's trying to make sure this isn't something where the customer is constantly looking over their shoulder, waiting for a margin call sort of thing. So we need to give people enough room to kind of live their lives without having to worry about Bitcoin.
You said the team's based out of the US. Is that where the early mortgages are going to be opened? Or given that crypto is sort of a global asset class, is this something people can take to any country?
Yeah, we encourage inquiries from any country because it tends to be that we can find the right mortgage lender in each jurisdiction. And yeah, so it's a global product. We know that at the moment, the US and especially sort of states like Florida, Arizona, Southern California, these tend to be the areas where we think there'll probably be the most demand. And it's certainly where we see the most demand from consumers right now. And there are a couple of competitors in the space who've started doing their first loans, that sort of thing. So it is an early market, but it is one that does exist already. But I think globally, this is something that we see as a big shift. This is kind of blockchain technologies, almost one of its real use cases. The ability, as I say, to collateralize inflation-protected assets and borrow against them more easily than maybe you ever have done before. Being able to tokenize assets, whether it's art, whether it's your, the S&P portfolio that you might have. Yeah, I think that is a global problem, that people have assets that they can't borrow against simply. And it's not going to be restricted to just the US.
And this in a world, obviously, as well, where there's more freedom to move around and work from anywhere. I think it's certainly an interesting move in the marketplace and a lovely linkage between kind of the most traditional of all lending types, the mortgage, with something like crypto. You're obviously dealing, though, with people with significant crypto assets. So these are probably fairly sophisticated investors who've been in the game a long time. And I'd be quite interested if this group of high net worth from the crypto space, how they overlap with traditional credit. Are these a different sort of customer that maybe traditional banks weren't speaking to in the past?
There is a mix, but the really large crypto holders tend to be ones who are just very early to the space. They are an underserved market, and a lot of their holdings remain in crypto. a lot of these people didn't get into crypto to then move back into fiat. They got into crypto because they think they're going to stay there for the rest of their lives. So, it's more that they're dabbling in the world of fiat, but living their lives in crypto as opposed to the kind of reverse. That's the kind of odd customers this is the kind of customers that we're seeing that typical banks just don't have exposure to, which I think will make it quite an interesting space for the future, especially if they begin to move into the space themselves.
So value created for the system in a couple of ways. You said obviously that in terms of timing, with the larger pressure of rising interest rates, maybe just the market losing a bit of steam, it's not everybody rushing out to invest in real estate right at this moment. But in terms of your early response, you've obviously hit a few headlines. What are you hearing in terms of excitement to try it out and to use it to buy some properties?
I mean, it's been really encouraging. I think what we're finding, which may be a bit of a surprise, is because of the way that we finance this, and we're using a mixture of traditional finance and decentralized finance to come up with the loans. And at the moment, decentralized finance is the cheapest place in the world to borrow money, especially with interest rates going up. It remains untouched. So what we're finding is that part of why we're getting such good demand is the rates that we're actually able to offer, especially to customers in the US who, typically seeing their kind of 30-year mortgage rate, topping 6% and likely to go higher. We're finding that there's short-term financing solutions via decentralized finance right now, which you can get for 4 to 5%. So, you're cutting a couple of 100 basis points off for a lot of borrowers. So I think what we're finding as well is not only are we getting the crypto natives, but customers who've looking to refinance and thinking, is there a better way I can do this now that we're going into a slightly higher rate environment? So yeah, it's all we really need to see, which is what we're actually seeing right now is kind of a stabilization of crypto prices. And people say, is this the right time to found the business? Well, would I prefer to found it at 68,000 when Bitcoin's at 68,000 and now crypto drops 80%? Probably not. I'm happier here at the lows. And, we always say build in bear markets to kind of, exploit the next cycle. And crypto is cyclical. It's going to take some time to get back to where we were. But I think, it's also going to take time to build a product, make sure, build this business, get people to know about us and that sort of thing. So hopefully this is the ideal time to be launching it, that, as and when people are really pushing back into crypto again, that we're there front and center with a product that's battle tested.
The big question was always, when's it going to fall? And if it falls, how much? And as you said earlier, when you've got that as your down payment, you want a little bit of security. And I think after it's fallen, I think it's a good time to be trying something like this out. If people listening would like to learn more, they want to investigate the offering, maybe even want to get involved, where can they go to learn more about ByBrix and the product?
So probably the best point at the moment is bybrix.io. So it's bybrix.io. Troy Huerta is our CEO, and myself. We've built a great team already. Please reach out, go on the website, sign up to the newsletter or request a call back. We're here to help. There's also a mortgage calculator on there that people can go and have a little play around and what crypto they hold and see what kind of house they can afford to buy with it. So those would be the best ways. But or just hit us up on LinkedIn. Where we try and get back to as many people as we possibly can, and love hearing direct feedback from customers because it's it helps us develop the product. So we're really keen that people reach out. And please don't hold back.
If they do follow you on LinkedIn, I see Troy does a weekly update. So you can really stay in touch quite easily, just seeing what's happening in a space that even if you're not ready to invest, even if your holdings aren't large enough to give you ideas of becoming a real estate investor, if you're just interested in what's happening in crypto, what's happening in real estate there, I'd encourage you to sign up and just see his weekly updates. In a model, as we said, when we spoke 6 months ago, is going to be accepted more and more. There's obviously some questions about how to make it work, and you're one of the first ones to try a model. So I think anybody who's interested in where lending might be in 10 years' time is going to do well to have a look at what you're doing and watch how that grows as it all settles. And hopefully, we can enter a world with a little bit more stability in our markets, in all markets, and we can see how these different business models grow. So Phil, it's been great chatting to you again. Thank you for your time.
Pleasure. Thanks as always for your support, Brendan. Much appreciated.
And thank you all for listening. If you enjoyed that, please do rate and review on your preferred podcast platform and share widely, including on LinkedIn. And while you're there, send me a connection request. The show is written and recorded by myself, Brendan LaGrange, in Brighton, England, and edited with assistance by Kane Hunter. Show music is by I Am Wake, and you can find full written transcripts, show notes, and more content at www.howtolendmoneytostrangers.show. And I'll see you again next Thursday.